I'm ready, are you? Okay.
Good. Okay. So diving in a little deeper into credit, we have two different types, installment credit and revolving credit. Have you guys heard of either of them? Okay, who knows what installment credit is without reading the board? Becky?
It's a type of credit that you have fixed payment, you have the same certain number of payments, the same
Sure.
amount all the time.
Yep. So the easiest way to describe installment credit is a car loan or a home loan. And so what this is when you have a set time to pay it back. For example, to get a car loan, you're going to go to your bank, your credit union, or an auto dealer, and they're going to get a loan for you. Typically, they run 60 months or 5 years, so you have a set time to pay that back. You'll also have an interest rate that is set. Typically, car loans don't vary. You're going to have one interest rate for the entire time that you pay the car loan off. Home loans are the same way. Now, home loans get a little trickier. Those can vary on rates, but that's something that we can discuss at a later time. Revolving credits, a lot of us, does anybody in here have credit cards? This is revolving credit. What this means is that you have no set time to pay it back. So, Jameson, if you charge $300 on your credit card, do you have a set time to pay it back? Do you have to pay it back this month?
No.
Okay, right. So you really don't. You have to pay minimum payment, and that's all you have to pay on that. Interest rates tend to vary on credit cards. This is based on credit history. So you and I could both have the same credit card and very different rates. Do you guys have any questions on installment or revolving credits? Okay, and you do have the guided notes there as well. They have boxes for you at the bottom to fill in. So where can credit come from? They can come from banks, federal government, which is usually typically student loans, credit unions, private companies, or department stores. The private companies I have up here, like a payday loan or even a check into cash. What are some other examples you guys can give me on that? What are some other private companies that might give out loans or give out money or credit? Okay, Sallie Mae?
Yeah, private mortgage company.
Exactly. Yep. Can you guys think of any of your favorite department stores that give out credit cards? Right?
Just the other day, they were trying to sell me at Kohl's to get a Kohl's charge card.
Yep. So most of us, whenever you check out, they're going to ask if you're paying with store credit. Most stores now do offer their own types of credits.
Old Navy offers one and you get a discount.
Yes.
If you sign up for credit.
Yes,
you
there's
get
a
discount.
lot of promotion.
That's what Kohl's is too.
Yeah.
Yeah, and it's a good way for them to track your buying habits too. So it kind of serves dual purpose. They get you to buy more, and they get to track what you're purchasing. So what happens when you use your credit card? So say you do have that Macy's card and you want to go buy a pair of boots. Well, you pay $349 for the boots and you put them on your Macy's card. You don't have the money to pay for them all right now, so you're just going to make minimum payments. And it's going to take you about 3 years to pay off. While store cards APR tends to run pretty high because there's, specialty cards. Let's say your Macy's card has an APR of 29%. Who remembers what APR is again? Exactly. Yep. What you're going to pay per year in interest. So you're going to pay $101.21 every year on those $349 boots. So if it's going to take you 3 years to pay off, you've essentially paid $652.63 for those one pair of boots. Does everybody understand this? Okay. So you've got to watch your interest, and you really have to be careful about only making minimum monthly payments. So what is bad debt, and what can it do? Well, overspending can put you in a position to essentially just continually have bad debt. Getting in debt with one credit card and carrying a high interest rate can just lead to doing the exact same thing. There are different types of credit cards out there for different levels of credit. Each one comes with a higher interest rate. So you want to be very careful about applying for these cards and only being eligible for these cards. It can also have a negative impact on your credit score. Who remembers what the credit score is? Ryan?
Sorry.
It's okay. It's on your writing notes. It's a detailed report of your personal credit and your financial transactions. So credit score is basically keeping track of everything that you have applied for loans. It keeps track of your payments. Basically it keeps track of everything that has to do with your spending habits when you have borrowed money. So here we are again, the credit scores. And how these are, they're determined by how you make the payments on the credit cards. If you ever have anything go to collection, that's a negative impact on your credit score. Also, if you have any bankruptcies, any federal judgments, or any garnishments on your public record, that is also a negative impact. Does everybody know what garnishments are? So garnishment is something that is taken out of your paycheck. So for instance, if you owe back child support, they're going to garnish your wages, which means it will automatically come out of your paycheck and you don't have a say in that. Does that make sense? Do you guys have an example of something else that could be garnished?
Student loans.
Yep, student loans is a big one. Okay. Also, it will show how much overall debt you have. So your credit score will reflect, if you have, like a lot of student loans, you have cars, you have houses, it's going to reflect all of that debt. And then your overall history. So maybe you have just built credit. Maybe you just got a credit card for the first time this month and you don't have credit yet. Your credit score will reflect that. Every time that you try to get a new credit card or you apply for a loan, typically your credit score is impacted by 2 points every time that you apply. Now this can vary depending on what you're applying for and how they're checking your credit report. Also how many accounts you have and then what types of accounts they are. So how do you get a good credit score? For sure make your payments on time. Make sure that you're always on top of that. Be sure to stay current on the report and any inaccuracies. They say typically the rule of thumb is every year you want to check your credit report at least once. And there are 3 companies. You can get a free credit score from each of those companies. At any time you just want to go online and they'll give you that either via mail or you can get it right there instantly. Always lower your balances when possible and pay off debt rather than dispersing it. Do you guys know what this means rather than dispersing your debt? Scott?
It just means like if you have one credit card, pay off that one credit card instead of getting 3 and transferring the balances.
Exactly, yeah. So balance transferring is something that all credit cards will try to get you to do. Just try to work on paying one credit card down because balance transfers aren't really usually beneficial. Okay, so the activity that I have for you guys is actually to learn how to fill out the credit card application. You'll see some of the terms that we just went over, and I want you to look for, is there a grace period on this? What is the APR? Are there any laws that are going to affect you on this? And then what are some things that you don't understand? So you can either work with partners on this or we can work individually, but you have about 5 minutes or so to go through and then I'd like to get back together and review it.
You said you want to know what is the grace period and what is the APR?
Yep, APR, grace period, any laws, and then any questions that you have or any terms in here that you didn't know that we could go over. And they're all on the slide in case you guys forget.
Would you like us to look at the classes or the platinum?
Both. I want to talk about what decision you would make. Do you want me to continue it if we had a lot of time? Okay, so we'll pretend that everybody had time to fill this out. So who can tell me what the APR is on the Classic card? Yep, Becky, what about the Platinum?
17.99.
So which one would you choose, do you think?
Platinum,
Okay, and why is that?
lower interest rate,
What does that mean?
pay less.
Per year. Yeah, so how that affects you is that if you, again, buy that $300 purchase, essentially you're paying less on interest per year with a Platinum than you would be on the Classic. Jameson, is there a grace period?
25 days.
Okay, and what does that mean?
Means you have 25 days to pay in between
that
Right.
you won't get a penalty. Yeah, so if you're a few days late on this,
Okay.